The $5.9 billion Air Canada buyout, investors thought this would send the stock soaring to about $32 per share. However, it ended up dropping all the way down to $24 and change by the end of the week. We're going to be discussing that today, as well as going over my portfolio, what I bought and sold in my TFSA account. I'll be telling you what I'm buying next week. Maybe Air Canada will be one of those stocks. And finally, I'll be answering a couple questions from last week's video. Remember to leave any questions that you have down below in the comment section, and your question might be featured next week. For those of you new here, my name is Daniel, and here on this channel, we talk about stock market investing with a focus in the Canadian markets. So if that's your jam, then go down below and subscribe to this channel right now. And just to recap on the series, the purpose of the series is to deposit $200 every single week to show you guys how to build up wealth using a consistent dollar cost average method. I want this series to be relatable to an average Canadian out there who can spare maybe $50 to $200 a week. And I'm going to show you my progress and how I do it over the course of 3 years, and with a final target of hopefully hitting $50,000 after 3 years. I've got one announcement to make before we move on to the video. This past weekend, I was working on a tutorial on how you guys can build up your own portfolio spreadsheet. So I have that in a Skillshare course, and it's completely free if you sign up for the membership, as long as you complete the course in 14 days. So if you're interested in that, links are in the description as well as the pinned comment. Now let's move on talking about Air Canada and what happened this week. Basically, the government of Canada was giving Air Canada around $5.9 billion of capital. The $5.9 billion was not given to them without condition. $500 million was given to Air Canada in exchange for equity at a price of $23.17 per share. $1.4 billion was given as a loan to Air Canada so that they could repay customers who bought tickets and had their flights canceled on them last year. In addition to this, the remaining $4 billion was given to them in terms of a credit facility, so Air Canada could withdraw from it based on certain conditions. At the end of the day, Air Canada would have to repay the government around $5.4 billion if they max out this line of credit, with some interest on top of that. There are a couple of things Air Canada must do in order to receive these funds. And the first one I've already mentioned, which is that Air Canada must refund customers who bought a ticket last year and got their flight cancelled because of COVID-19. The second item that Air Canada must fulfill is capping their executive pay at $1 million per executive until they pay back the remainings of the loan. The third item on this list is that they must suspend all share buybacks as well as dividend payments while they have some money loaned out from the government. The fourth item on this list is that Air Canada must maintain a minimum employee count as what it was on April 1st, 2021. The second last requirement for Air Canada is that it must resume its regional service to areas that were cancelled due to COVID-19. And the final requirement from the government is that Air Canada must complete its purchase of 33 A220 Airbuses, which are being manufactured currently in Quebec. After looking at this news, my personal commentary on the situation right now is that this is not a free lunch from the government of Canada. Air Canada has a pretty tough end to hold up on its bargain. First off, the company is expected to repay around $1.4 billion to customers who canceled their flights. This is going to be taking cash off the balance sheet and putting actual debt on the balance sheet. So this is not a great start for investors. But the saving grace in this is that customers won't be as angry with Air Canada because they've taken their money. So maybe it'll do some positive things for the brand itself, but for the company's balance sheet, it kind of sucks. My second comment is that the government got in at a steal of a price compared to where shares were trading at the time of the announcement. When the announcement was made, the shares were trading around $27 per share. However, the government of Canada got in at $23.18. As a shareholder, this is not very good dilution for the company because the shares are trading at a higher value, but now new shareholders, aka the government of Canada, got in at a lower share price. So I would say that's probably the main reason why the stock sold off. And the fact that this equity raise was negotiated at a significantly lower price kind of shows you that management and the government of Canada came to agreement, realizing that the shares were probably a little bit overvalued at $27, and it was only fair for the government to get in at a lower price of $23.18. The point about the share buyback is another thing that probably impacted investors negatively, because in the past, Air Canada has been buying back its shares prior to the pandemic. and this ends up inflating earnings and making the shares look a lot more attractive. And the company being a buyer of its own shares in the market can often also help inflate the share price because ultimately the share price is based on supply and demand. So when a company goes out and buys back its own shares, it's sort of artificially inflating demand for its own shares and indirectly raising the price. As an investor in Air Canada, that means one less buyer in the market for Air Canada stock, and that's a pretty big buyer. So with Air Canada shares looking like they were plummeting last week, and who knows what's going to happen this week, what I'm going to be doing is I'll probably continue to dollar cost average into Air Canada. At the end of the day, I believe that Air Canada will be able to get out of this next year or so, and I'm planning to hold Air Canada shares for a long time, at least 5 to 10 years, if not longer than that. So because my time horizon is large, I don't mind buying it at these prices, and the fact that Air Canada shares were around $50 to $60 pre-pandemic, I believe that we could get back to $50 to $60 per share or even beyond that in the next 5 to 10 years. If I were a shorter term trader, personally, I probably wouldn't get into Air Canada though. Now let's hop onto my computer and review what happened in the Wealthsimple trade portfolio this past week. So we're here in the portfolio and currently it's worth $3,046.99. It's up around 8% in the past month, but over the past 3 months, it's only been up 3%. If we go over to the activities tab, I'll show you everything that I did this week. So first off, I did a deposit just earlier today and I deposited $200 into the account. On April 14th, I bought HXQ, or this is basically a NASDAQ ETF, for $98.38. I got a dividend from AQN, or Algonquin Power Corp, of $1.95. I also bought some Air Canada last week at an average price of $26.68. I also purchased some TELUS. I bought 3 shares at $25.69. I had a limit buy for Enbridge that was ultimately canceled because it didn't go through for 2 shares at $46, but that didn't happen. And I'm not really sure if I'm going to be buying Enbridge this week. I think I might just wait it out because I have a new stock that I'm looking to buy into. Lastly, I bought another share of Stella Jones at $50.49. So that pretty much sums it up for all the activity that happened this past week. Now jumping over to the TFSA tracker spreadsheet, if we sort this by 1 week performance, we can see that GDMP was a stock that went down the most by around 8.87%. And the stock that did the best this week was Stella Jones. The reason why I believe Stella Jones is going to do very well over the next couple of years is because of the housing boom and everyone trying to get into new builds or trying to buy a property. And if we look over here on this news article, we can see that lumber futures hit $1,260 per 1,000 board feet. Lumber prices have soared during the pandemic. Last April, that same order would have just costed $358. So effectively, lumber prices have pretty much 4x'd over the past year. And that's why Stella Jones has been doing quite well in the past year. Jumping over to the portfolio metrics tab. So I made a little bit of an update to this table here. I've added a row called dividends collected. So I've collected $2.78 since starting this portfolio. We can also see at a quick snapshot that if I bought the TSX index fund instead of buying all my shares, then I would have actually done better. So currently my portfolio is down around $75.69 versus if I were to buy a TSX index fund. Or in percentage terms, that's 2.42%. However, just as a grand total for the portfolio, the percentage change is 0.18% and the 1 week change is 0.51%. We can see the total market and the book value right up here. And I've also added a column for a currency corrected book value as well as market value in case I ever buy US stocks. Now looking forward to next week and what I plan to do in this portfolio with the new $200 that I just added. The first stock that I'm looking to add is GDMP. And the reason is I believe in this company long term after doing some research, and you can check out that video in the top right corner. This company has been growing its revenues by triple digits every single year, minus this past year in 2020 where they only grew double digits but still above 50%. In 2021, I believe they have a 99% chance of achieving a triple digit growth, and that's based on one of the latest acquisitions. And that company brought in around $16 to $17 million of revenue, which was exactly what GDMP brought in year 2020. Add those two together, then they've got a 100% increase in revenue already without any sort of growth to their underlying business. The next company that I plan to boost up my holdings in is RioCan. And RioCan currently sits near the bottom of my portfolio in terms of percentage allocation. So for that reason, I'm going to add a couple more shares this week. As I mentioned before, if Air Canada continues to drop this week, I'll probably add 1 or 2 shares of that as well. And lastly, the stock I'm adding is a new position in this portfolio, and this stock is none other than Dollarama. If we look at the charts of Dollarama, they've been trading pretty much flat over the past 3 to 4 years. And just recently, the stock started to move upwards past its previous all-time highs. And you might be looking at me wondering, why am I buying this stock when it's breaking out to new all-time highs? Why not wait for it to drop back down? Well, the reason for this is because if we look 3 years ago or 4 years ago and look at the business then versus right now, I believe the business is a lot better off in this day and age. If we look at the revenue numbers, they did about $4 billion in revenue during the pandemic, and that's a pretty amazing feat. And they managed to grow that over their 2019 revenues. So unlike most businesses, Dollarama still grew their business amidst a world pandemic. And they've been growing that revenue pretty steadily over the past 4 years. Although their earnings per share in 2020 didn't trump 2019, that's just because there were a lot more restrictions in Canada, like for example, non-essential goods cannot be sold in Ontario currently. So this is ultimately going to affect Dollarama's underlying profits. However, it's only a short-term thing. Once we get out of the pandemic, Dollarama will probably post incredible revenue numbers and revenue growth because they're able to sell all year round, non-essential as well as essential goods. Now moving on to questions from last week. The first question we have is from Zmaster21. Can you show us how to receive the dividend payments from the company you invest? Can you also explain to us when does companies pay dividends? When a company pays out its dividends and you own that company in your brokerage like Wealthsimple Trade, it's going to go to your brokerage account directly. You don't need to send anything in or kind of look out for forms to fill out online. It'll just automatically appear. And I'll show you an example right up here where I've had a dividend transaction that actually came through this past week. In terms of when a company pays dividends, it really depends on the company. Some companies pay an annual dividend, some of them pay a quarterly dividend, as well as some even pay a monthly dividend. So you're going to have to look into the shareholder reports to see when the dividend is typically paid. And that being said, a dividend is not a guaranteed payment quarter to quarter, month to month, or even year to year. Companies sometimes do decide to stop the dividend for one reason or another, and one of those reasons in this past year that was very common was because of the pandemic and no one knew what was going to happen. So a lot of companies decide to suspend their dividend or even roll it back and reduce their dividend. The second question comes from Cheska Vergara. Hi, I just opened my TFSA account last November. My question is, how often can we sell stocks? I know that investing in TFSA should be a long term. So I get this question very often. People are wondering, how often can you actually sell or even buy stocks in a TFSA? And honestly, there is no hard and fast rule. It's just as long as you're not day trading in it, which probably means like doing 3 or 4 buy and sell transactions in a single day. If you're buying every single day as a dollar cost average method, I honestly don't think you're going to have any trouble with the government. But if you're buying and selling consistently every single day, to make it look like that you are day trading, I would probably speak to a financial advisor and ask them what their opinion is. So that wraps it up for the questions of this week. Remember to submit any questions down below and they could be featured in next week's video. As well as if you want to get a jump start on how to create your own spreadsheet tracker, check out my Skillshare course. It's down in the description below. If you guys missed my previous video on my $43,000 Wealthsimple Trade personal portfolio, it's right up on here on the screen, as well as I've got a video about GDMP here as well. If you're there, I'll see you there. If not, keep up the grind and have a great day.